Yo, what's up, everyone? Welcome back. My name is Nathan Robert, and today we're going to be going over 3 dividend stocks that literally, once you buy them, you should never sell these. They're that safe, and I've carefully screened these stocks to be ones that have huge high dividend growth rates because that's what we love to see, and it has a history of never cutting their dividend, and they raise their dividend by more than 1 cent per year. You know, there's dividend kings and dividend aristocrats that just raise their dividend by 1 cent per share. But no, I've carefully selected these so they have some insane dividend growth rates. And yeah, if you guys do like this kind of video, I really would appreciate if you guys leave a like for me and subscribe if you're new. And yeah, let's check out what these 3 stocks are that actually have these so-called insane dividend raises. Alright guys, so for the first stock, it is actually one I own right over here. It is a REIT and it is ticker symbol AMT. I actually just bought one more share of this, and another reason I really wanted to include this one in the video is because it's actually at a great price right now. It's just at where my cost basis is of 192. I own 10 shares, and I also wanted to show you their dividend history because it really needs to get through your head how good this dividend history is. Check this out. So check out the dividend history here. In the most recent quarter, it was 156, and then before that, it was 147. So check out the dividend growth history. They didn't even have to cut it during the pandemic because they own cell towers, and cell towers are so, I guess you could call them recession resilient because, you know, everyone's still going to be using data in cell towers. And you know, one really bullish thing I have for American Tower is the amount of cell phone and AI and self-driving data usage. Alright, so let's check out this article from the Motley Fool. I get the Motley Fool isn't the most reliable source, but yeah, check out some of these charts. Right now, it's at its highest dividend yield you can basically get it at since up here, or basically of all time, the highest dividend yield that it's at. Alright, so now it's talking about the dividend growth ahead. As you can see, it's grown at a 12.5 annual % dividend growth rate, which is the highest I've ever seen. Like, if you hold this REIT in 5 years later, your dividend will probably be double what it is today. And that's why I think this REIT is just a no-brainer. It's worth over $100 billion in market cap, and so I would just have to pick up this stock right here. And I bet you're wondering, is the dividend safe? Well, check this out. American Tower can easily afford the higher payout. At $3 billion, American Tower's dividend payout ratio would be around 67%. And as you know, REITs have to pay out 90% of their taxable income. And so this is at a very healthy level for the REIT, which I totally agree with. So check this out. This is one thing I really wanted to show you guys. So let me zoom in because this is big. Data usage continues to surge. Total connected devices in the US should grow at 10% annual compound rate. Imagine your stocks growing at 10% annual compound rate, while US mobile data projected to expand at a mid 20% compound annual rate through 2027. Oh my goodness, see, this is why you got to be invested in American Tower Corp, because it's really going to be American Tower Corp that gets all the benefits from this huge, you know, mobile data usage going up like crazy. They're really going to benefit from it because everyone loves to have data wherever they go. I mean, imagine you're in the car without data. You know, you just got to have data everywhere nowadays. All right, so enough with the American Tower. You already know my thoughts on how many shares I own. So now we're actually going to go into the next dividend stock, which is actually one I just bought, and it is ticker symbol UNP, or Union Pacific. This is big in the railroad industry, and I have some amazing things about this company that I cannot wait to show you. So this is another one where I wanted to pick a stock that's at a pretty good deal right now. So it's actually $194, and my average cost is $203, so obviously below. They're actually big in the news right now because I know you've probably heard of that Ohio derailment train. That actually wasn't a Union Pacific train, but it was one of its big competitors known as Norfolk Southern. But yeah, I want to give you guys my thoughts on Union Pacific, and it's because I genuinely think this is only going down right now because of the negative view and uncertainty of the railroad industry because of what happened in Norfolk Southern and their derailment. But yeah, I think it's actually at a great buying opportunity right now. Alright guys, forgive me because we're on a phone. It might be hard to see, but now I'm going to show you guys some actual stats that I think you'll find pretty interesting if you want to invest in a company such as Union Pacific. So here is its dividend growth history. As you can see, it just went from $1.18 to $1.30, which is almost a 15-cent increase in 1 quarter. As you can see, they've been raising it almost every 2 quarters, not even every full year. As you can see, they haven't had the best history of consistently raising it, but it definitely has just been raised over time. As you can see, they've never had to cut it back here. It's always just been a solidly growing dividend. Another thing I wanted to show you is in their investor presentation, they brag about how they use all their excess free cash flow straight to stock buybacks. So check this out. They have been spending, well, $785 million in the past quarter on stock buybacks. As you can see, well over $2 billion for the past quarters. But yeah, this is one of the main reasons that I think you should just invest in Union Pacific. And another thing I want to just show you is the total common shares outstanding. As you can see, right now it says 612 million shares outstanding. And just look over time, like 2021, it was 665. 2019 well over 700 million. So they have literally just been buying back shares like crazy. And I don't know if you guys know how the math works, but if you buy back half of your shares, like hypothetically, if they went from 600 million to 300 million shares, it would make their EPS go up by double because there's half the shares outstanding. And if they buy 67% shares outstanding, it actually goes up 3x. So the more they just buy back shares, so check this out, their EPS is actually at the highest it's ever been. If you're wondering how is that possible, it's because they've been buying back stock, and that's why their net income and their operating income wasn't as high as last quarter's, but their EPS was, if that makes sense. I hope you guys are sticking with me here. Right now they have a yield of 2.7 or 2.68%, but I think they're going to keep raising their dividend. I think it's very safe to say that they'll keep raising their dividend as they buy back more shares. And those shares that they buy back, they actually don't have to pay dividends on those, so it'll just be compounding more and more over time. And I think in 5 years, you would have a great cost basis on this stock for them buying back stock and the amount they raise their dividends. So that's why I had picked up 9 shares of Union Pacific at an average share cost of $203. So you could buy it right now lower than my average cost basis. And yeah, that's pretty much just my opinion on Union Pacific. Let's get into the last and final stock. Alright guys, so for the last stock, it is ticker symbol PLD. It is known as Prologis. And when I show you guys their net EBITDA margin, you're going to flip nuts. I mean, they have some of the highest EBITDA margins I've ever seen for any company ever. So they actually just approved a 10% increase of quarterly common stock. So it was 79 cents and now it's actually going to be 89 cents. So imagine just for holding a simple stock just as this, that has a yield of 2.6 right now. This doesn't factor in their new dividend price of 89 cents a share. So yeah, let's see why this REIT has had some insane returns. And I do believe this is the biggest public REIT by market cap. There is no REIT that has a higher market cap than this. And if you go to most US REIT ETFs, this is usually the largest or second largest holding in that actual REIT. So yeah, let's go deep dive into some of the Prologis financials and dividend stats. Alright guys, so here we are back on the Webull app. You know, I swear the app is better than the desktop. The desktop doesn't give you all this information. But yeah, let's check out this net margin. So here's their assets versus debt. You know, they have some of the lowest debt for a REIT. And they actually just went through, their assets went up like crazy here because they just acquired Duke Realty. You've probably heard of them. They're pretty popular. They just acquired Duke Realty, but check out their net margin. Their net margin is low right now because they just acquired Duke Realty, but check out what it is on normal. You know, literally almost 100% profit margin, net EBITDA. So look at their actual EPS. Look at their book value. The book value is pretty good here. Let me show you actual some dividend stats about this. So right now it's obviously paying 79 cents a share, but now it's actually going to be 89 cents a share, which is huge. And before that, it was 63. Pre-pandemic, it was 53. So imagine going from 53 to 89 cents. You know, that right there is some insane dividend growth. And I get all the stocks on this list have had a yield just around 3%. I still think that over time, your yield on cost, this could be like a 5 to 6 to 8% yield on cost 5 years down the line. And that's why I really want to pick some shares of this up. I used to own 2 shares, but I sold it just because I didn't want to only own 2 shares. I want to own an actual decent chunk of each company. But yeah, I just wanted to give you guys a few dividend stocks that literally once you buy them, you never need to sell them. You know, these are great stocks to put in your Roth IRA or a taxable account if you don't mind getting taxed. I'm pretty sure all those dividends in this video are qualified dividends. I'm not sure about Prologis, but I know Union Pacific and American Tower have qualified dividends, so that's taxed for me at 12%. But yeah, I hope you guys did enjoy this video. I'm trying to get to 1,000 subscribers, so if you look at the number right now, we're kind of getting close. And yeah, I appreciate everyone being here. Hope you guys have a great rest of your day.